let's talk bonds, right? Lagos State government has floated 100 billion naira subnational bond being priced between 14 and 15% at the domestic debt market. Now, the new instrument by Nigeria's largest economic unit is the first from any state government in the new year 2023. It's aimed at financing a number of priority projects across the state. And now let's speak more about it. Heading to our Lagos studios, we're going to be talking to Lanre Buluro, who is the Managing Director, Investment Banking at Hill Denham. Mr. Buluro, good evening to you. I hope you can hear me. Thank you so much for joining us. Lagos State has a lot of plans as far as where this bond is supposed to be priced, between 14 to 15%. Where does that fall as far as the subnational bonds are concerned, as far as the market funding? Who is going to be able to buy this bond? We're going to get into some details there. And also as far as what this means for the local debt markets. Okay, I think we have Mr. Buluro now. We can see him on our screen. Good evening, sir. Hope you can hear me. Thank you so much for joining us on the Arise Exchange. Can you give us some more details on this new Lagos State bond?
Good evening, and thank you for having me. The bond opened late Friday night and is going to be closing on Friday this week. It's 100 billion for 10 years. It's an unsecured bond. And as you know, Lagos State, is the only subnational that's been consistently tapping the debt capital markets. It's a responsible borrower. And it's been doing this for years. I mean, the state has raised over 1 trillion naira over the last 10 to 12 years from the capital markets. It is to finance the budget. There are key projects, over 120 or 150 projects they intend to finance with the proceeds. These are new projects, these are existing projects that are about to be completed. And it's just the normal course of business for the states. This is open to qualified investors, a SEC-regulated transaction, and only qualified investors are allowed to buy this an instrument.
Thank you so much for that. Let's talk about pricing. Bond is, we understand, between 14 to 15%. There's conversations around the real rate of return. If you think about where inflation is right now, is this competitive and attractive enough for investors?
Yes, compared to what's available, if you're a fixed income investor, right? Particularly if you're a pension fund or an asset manager, a big portion of your portfolio are federal government bonds. This is benchmarked to the 10-year FGN. At the last auction, the 10-year FGN is around, around 14.75%. This is providing a little bit uplift in terms of yield above that. So we are familiar with what's going on with inflation. But in terms of capital preservation, in terms of over the 10-year period, we believe it's quite an attractive instrument in the market. Like I said, it's a yield uptick pickup compared to the FGN that normally long-term investors will have in their portfolio. I think this helps diversify the portfolio and provide an additional yield. Again, it's a book build process. We are open till Friday, and we'll see where submissions will land. Like I said, it's a kind of an auction process. So at the end of the book build, we'll see where the price is, and we'll clear the price at where at the price we think is fair. And where we get also the size. We're looking to raise 100 billion with an option, a green issue option, additional 15%.
Great stuff. Who's going to be able to buy the bond? I think are we high net worth individuals being targeted as far as the minimums to buy into it?
About 10 million, yes. So this is SEC qualifies by called qualified investors. So it's a pension funds, it's a fund managers, a corporates, and HNIs. And qualified investor could be someone who's savvy enough to understand the risk, understand the instrument, and has capability to to buy a minimum of 10 million naira.
Now, as far as your professional advice as an investment banking professional on this subnational offer, what do you make of it compared to what else is out there in the markets?
For there are a couple of corporates who come to the market also frequently, but I think as of right now, or what's available, this is very compelling. I think it's very, very attractive. And I think, again, investors need to evaluate the risk reward and also look at their portfolio and see if there are any other options in the market. The other option I can see today is the 10-year FGN bond. You can probably try and buy some corporate bonds in the secondary market, but that's very, very hard to get, particularly ones that are very well, fairly priced. So I think as of right now, this is a compelling opportunity, and I think investors should definitely make a judgment call about investing in this instrument.
All right. And what's your outlook on bond issuances by state governments in general? You had a lot of good things to say about Lagos State, raised over $1 trillion. They're a great borrower, and so on and so forth. But that's Lagos State. It's the commercial capital of Africa's largest economy. What about the other states, considering where they are fiscally? All right, let me ask that question one more time to Lanre Buluro, who's the managing director over at Hill Denham, investment banking. I was asking you about the other states, your outlook on bond issuances by other state governments that are not Lagos. You had a lot of good things to say about Lagos State when we started the segment. Great borrower, they've raised over $1 trillion, and but again, this is Lagos State, which by itself is bigger than most African countries. So what about the other states in Nigeria, considering where they are fiscally? Can we get more options as far as subnational bonds, in your view, looking ahead?
I mean, right now there's a lot of work going on, with a lot of our clients. We are engaged with a lot of state governments. But in terms of, what we have today, Lagos State is probably the most, fiscally responsible subnational we have today. There are criteria to come and tap the capital markets as a subnational. Again, based on the Investment and Securities Act, a state government, before they can actually, successfully tap the market, need to, the debt to revenue requirements are such that, current outstanding loans or instruments and the current issuance they try to do needs to be about 50% of the last year's revenue. Now, a lot of states don't cross that bar. Even Lagos actually struggled to hit that bar. But there's another criteria which the DMO has set out, which is more of a debt service, monthly debt service ratio to revenue, and total revenue that is your FAC plus your IGR. Should not exceed 40%. Now, Lagos exceeds that. Lagos, in terms of its total revenue, IGR is about almost 75%. So it's able to come to the market based on those criteria. We're currently working with states, trying to get them to a level where we think they can tap the market. Another third hurdle, one of the biggest investors in Nigeria, the pension industry, they've been able to, crowding, capital into these instruments. And some of these states are not PECOM compliant. Lagos State is. And it's very important for a lot of states to, governors, new governors who are coming in, existing governors, to look internally to see how they can, prepare themselves to come to the market. Because there is capital that will support them if they hit certain criteria. Paying your pensions is one of them. If you do not pay pensions, the pension community would not support you when you come to the market. Then the fiscal responsibilities, like I said, understanding your borrowing limits, trying to grow your IGR, trying to grow, FAC is always going to be there. But I think the IGR is very, very critical. Just shows you, how sustainable you are. You can grow revenues. And then from a debt sustainability standpoint, it's very, very critical. And I think what gives investors comfort that you can support debt payments, whilst from an ISPO standpoint, from a FAC standpoint, you can get support, but internally being able to generate capital and revenue to support your debt service is very, very important and what gives investors comfort. So it's work in progress. Unfortunately, Lagos State is the only state right now I think is capable to come to the capital markets. But I think in the coming years, we'll see states, coming in, once they get their books in order.
Optimistic notes to end our interview on. Mr. Lanre Buluro, thank you so much. Managing Director, Investment Banking at Hill Denham. Thank you so much for talking to us about this landmark, bond that Lagos State has come to the capital markets with. Thank you. Appreciate your time.